In this video, I would like to show you how to access and utilize Marketsmith's 197 industry groups tool. This is an amazing tool. It shows you which stocks are in which industries. You can sort by which industries are strong, which industries are weak, and then within the industry you can do the same thing with the stocks, sorting which are the strong stocks, which are the weak stocks, and you can do it by all sorts of parameters. It's pretty mind-blowing. I've been using it for a couple decades, and yeah, it's been one of the fundamental reasons for my success investing. So let's jump right into it. And before I forget, I've got a Patreon where I show my current portfolio and focus list every weekend. It's only $5, so you might want to check it out. And at some point, I will do a whole tutorial on Marketsmith, the platform, but that's going to be much more involved. So let's just focus on the industry groups. So you open Marketsmith, and I'll put a link to Marketsmith in the description. It is a pay. You do have to pay for the platform, but yeah, you get what you pay for, right? So let's open up this bottom panel here. Now there's all sorts of things. My lists, you can favorite stuff, you can track stuff, you can run reports, screeners, but let's jump down to Markets 197 industry groups. You can open the little caret, you click on it, and here it is. Now, obviously you can sort it alphabetically. We begin with aerospace, and we end with, 197 groups later, we end with wholesale foods. That's not particularly useful, although I guess it is, if you hear a rumor that, I don't know, plastics are hot, then you could go in here and find plastics, chemicals, plastics. So, obvious thing to do, well, let's just go in order, I suppose. Here, this shows you the number of stocks in that particular industry, and finance ETFs are 3,000 stocks. And conversely, if we click on it again, media periodicals, this particular industry, there's only one. There's only 4 in building wood products, etc., etc. The one you'll probably use the most is the industry group rank. If you've read O'Neill's stuff, and if you think about it, it's best to choose stocks from the hot industries, because birds of a feather flock together, and industry groups tend to move up and down in groups. So here are the top 10 groups. Let me just read them to you. Oil and gas field services, retail, wholesale office supplies, retail department stores, retail apparel and shoes, oil and gas drilling, commercial service leasing, machinery, construction, mining, cat and deer in that group. They're doing really well. Apparel shoes. What's the difference between retail shoes and apparel shoes? I don't even know. Steel producers and medical hospitals. Certainly we've been seeing a lot of good stocks in those areas. So it's not quite as simple. Oh, let me back up. And then if you're shorting, you can flip it and pull shorts from the weakest 200. I don't know why they didn't do 200 industries. The weakest 197 industry groups. The very weakest: media, leisure, toys, computer software, etc. So I found over the years that it's not necessarily, you don't necessarily find the stocks with the most momentum in the highest rated group. A lot of times that group has been rated highly for a long time. They're kind of crowded trades now. They're in established long uptrends. Maybe they're even getting near their peak. So it often has proven more favorable for me to pull stocks from, maybe industry group 4 or 5 or 6, and to look at these stats. This is the industry group rank right now, the rank last week, the rank 3 months ago, the rank 6 months ago. And what I like to see is an industry that's not necessarily number one, but that has made a big jump. So, for instance, let's see, retail department stores, 6 months ago, it was ranked 163rd. 3 months ago, 73rd. And last week, 3rd. That's really appealing to me. Whereas, if you look at oil and gas services, well, that's really heated up as well. But, so, I guess it's not a good example. Let me think a minute. Okay, here's one. So, Industry Group 11, electrical, contract manufacturing. 3 months ago, it was ranked 12th. Now it's only ranked 11th. So that's not too big of a jump. Let's see. You can also sort by percentage change to date. The airlines are up 20% in 15 calendar days. Same with the metal ores group. Isn't that amazing? A lot of us would be happy to have a yearly change of 20%, and these stocks have made it up in just a handful of trading days. You can also sort by market value. I never do this. I suppose this is where you would find the big caps, banks, oil and gas, and the micro caps, food, dairy products. I've never really used that much. So let's jump in now to an individual industry. Let's rank them again. And let's jump into retail department stores. So if we click on it, it's a little bit, it took me a while to figure this out. You click on it. Now here is a chart of the group as a whole. Here's the monthly chart, pretty cyclical and lumpy. The weekly chart, since the COVID crash of 2020, it had a nice strong run, kind of a parabolic climactic move, and it's been basing all last year, but that's much better. We've got a sideways base versus if you looked at software or something, which would be an ugly waterfall down, right? Daily chart, here we see really this nice base. Let me skip my line tool, and we can just draw a line across a lot of the resistance here. You can see that it's really trying to break out as a group. Look at that. So let's dig now into the stocks. So you open up this panel on the right side, you click on it, and there are only, 5 stocks in this group? You know, I meant to click on this retail apparel shoes. That'll give us 34 stocks, and it's ranked just a tiny bit below the one I just showed you, but it had a huge jump from 143rd 3 months ago to 4th last week. So here is our all of the stocks in the group, and you can click on, here's the industry overview, and here are the top stocks in the group. Now you can click on these and pull up the individual charts. I do something different though. This will show you which ones are close to their all-time high. And here's the whole sector and which industries are hot in the sector. Let's go back to stocks in the group, and then you click on this, show all component data. And if this is up, it's hidden, so you need to pull this down until you can get to that. Click on it, and now you've got a list of all the stocks. And then you can do the same thing as you do with the industries. You can sort them by composite rating. This is maybe the easiest one. It just sorts it based on everything: revenue, sales, technical strength, etc. Advanced decline rating, you can sort. Oh, so composite rating, what's the hottest stock composite? Buckle, Lululemon, Boot Barn. Boot Barn, the chart looks really good actually. Destination, Ross Stores, Jill. Accumulation distribution rating, Burlington Stores is hottest there. SMR, I cannot remember what that is right now. SMR, I don't know, maybe someone can tell me in the comments. Industry group, relative strength, they're all in the same industry group. Relative strength, this is just technically which stocks charts are holding up best versus the entire market. Burlington, Buckle, Jill, Ross, Destination, Abercrombie, TJX, really like that chart. And this is just the performance during the last day. So what you can do now, let's sort it by composite rating. Let's move this down a little bit. We'll put it on the daily chart, and all you need to do now is press the space bar. Actually, probably you would want to go, well, what I would do is go daily. Then if I like the look of the daily, I'd go back and look at the weekly and then the monthly. But some people like to do it in reverse. But before you buy a stock, you always want to look at, you know, a 5-year chart and a 10-year chart. Or 20-year chart. Marketsmith does a daily, weekly, monthly. So what I was trying to tell you is all you need to do now is click on them, and then you can press the space bar, and it will show you the chart, and you can look at the revenue, you can look at the sales, you can look at the gross margin, EPS. You can see all the fundamentals, all the technicals, and let's just look at a few of these. Here we're working up the right side of the base. This is buckle. Yeah, this looks nice. Here's your cup. Here's your handle. Recently broke out of a handle right here. Pulling back to the pivot point. This could be a buy next week. Lululemon, a little choppy. Let's zoom out. Yeah, this one does not look like it's quite ready, does it? Definitely sliding sideways. I'd want to see it get up here near 400. Boot Barn, let's just go through a few of these for a few minutes and then we'll sign off. Boot Barn, I like this early turn here. Is this the 200 day? Where's my... Yeah, I believe the 200 day is in black and the 50 days in red. Tell me if I'm wrong in the comments. We want to see these both turning up. So this is a little bit of an angle warning here, but let's go monthly. Nice uptrend, big pullback this year like everything else. This is really early. You're just starting to start the right side of the base. Not to say it won't work, but sorry, if you buy here, there's just a greater chance it'll back and fill until both of these simple moving averages turn up. But certainly one to keep in mind. Now, obviously, there's a ton of trap buyers over here on the left, tons of supply that might burn off and cause some stagnation in the price movement. But retail's hot. Destination Group, casual male apparel, offering plus-size clothing. I've never heard of this one. Another cool thing about Marketsmith is, look at this. You got the website right here. Big and tall, men's clothing. Wow, I like that beard. I'm kind of average, so these clothes are not for me. But yeah, pretty cool. Wow. So this is a recent IPO, making its primary base. Got a little supply to deal with here. Company is just now becoming profitable. I like the look of this chart. You've got a nice base here. You've got a little bit of kind of bled off from the handle, but now it's back above the 50 day. You've got some supply right here. If it broke out strongly next week, you probably could give it a go. So I actually, instead of going through these on Marketsmith, I like the charts better on stockcharts.com. What I do is I click on export. I export it into an Excel document, and then I can easily import it into stockcharts.com. I can show you that another time if you're interested. This is the relative strength. Destination is stronger than 95% of the stocks in the market. And here is the S&P 500, so you can kind of compare the shape of the chart to the S&P 500. Let's just look at a couple more. Ross, a nice gap out on earnings. Here's the earnings, like so. And you can, sorry, if I was on the line pen, if you switch to track price, then you can right click, left click, and it will show you any candle. It will show you, so right here, the date, the high, the low, the volume, all that stuff. So yeah, Ross Stores, nice long-term chart. Took a hit this year, obviously. It's at an all-time high. The right side is a little bit compressed. We like to see symmetry in patterns, but clearly explosive work up the right side. Now it's making a handle. 1.1% dividend. You got your nice base here. Powerful move on earnings, and it didn't come back, and it didn't even retest the open price. That's a really strong sign of strength. Sometimes the gap closes. In this case, it didn't even test the open price. What you can do is you can buy on one of these gaps towards the end of the day and just set a stop right beneath it. That's a safe risk to reward. In this case, I really like this chart a lot. I'm going to put this on my focus list. And you got, a fractal, a pattern within a pattern, little base, little handle, a little bit of supply right there. But if it moves strongly early next week, I would definitely give it a go. And do I have a measurement tool on this? I think there's a percentage measurement tool within the toolbox. But gosh, it's been so long. I always use stockcharts.com for that. But in any case, I would set my stop 5 or 7% below, which hopefully will be about right here. So let's just do some simple math. So you just go 120 times 0.95, 114. So 114 is 5%. So we could put it down here at, what's this? 112. Yeah, so we could put it at 112 and be at about 7 or 8% stop, and that would get us almost beneath 50-day. Okay, well, that is the Marketsmith Industry Groups tool. If you have Marketsmith, make sure you start. Well, I encourage you to start using this tool. I use it all the time to find stock ideas. If you don't subscribe to Marketsmith, they're not paying me to promote it or anything, but I've had Marketsmith for about 20 years. It's been it pays for itself. The cost is well worth it. If you are a serious investor, I think Mark Minervini, U.S. investing champ, called it indispensable, and I really think it is. Well, let me know your thoughts, comments, questions below. Give this video a like if you got something out of it, and I will see you in my next video. Take care.